Yeah, it's 5:27. I think we're going to go ahead. The regular meeting of the Stuart Municipal Utilities on March 10th, 2022. I'd like to have roll call. Amy? Kim? Here. Brian? Here. I'm here. Shirley? Here. And Craig?
Here.
Agenda for approval and consent agenda.
I just got this yesterday. Is there a way this pre-agenda? I think we used to send out a pre-agenda a few days before, because if I'm home by 6, I get this before then. It'd be nice to have the agenda before. So is there a way that somebody can send on like Monday before the meeting?
Sometimes it's evolving.
Well, right, it'd be a pre-agenda or a pending agenda, something like that.
I'm sure you can get.
Yeah.
I mean, that'd be.
That's,
Mike's kind of the one that takes care of that. I shouldn't talk.
exactly.
What's that, Kim?
I can verify your Brian.
I wondered if we could get the agenda out before, the night before. Maybe actually look at it and see what's on there, if there are questions. And then in the event there are, things can be added or whatever. It's just like a tentative agenda.
Yeah, we can get you a. Okay. We'll review the minutes of the regular meeting of February 10th and February 28th. As presented.
I'll make a motion.
Moved by Kim,
Second.
seconded by Brian. We'll proceed to vote. I vote aye. Shirley? Aye. Craig?
Aye.
Kim?
Aye.
And Brian?
Yes.
The next item is utility property and liability insurance renewal proposal, United Risk Services and First Main Street Insurance.
You want me up here? Where's your preference? Or
Yeah.
over here? Okay, perfect. I do have plenty of handouts that I brought with me this evening to share with all of you. Take one of these and pass them down. Got those all distributed. Well, thanks for the opportunity to present tonight. I put together 2 handouts for the board this evening. The first that you'll see with Stuart Municipal Utilities listed here on the cover page. What I want to do is just provide a little bit of insight and clarity into United Risk Services and the new First Main Street relationship and affiliation. For anybody that had any questions around that, both myself and Lauren Bowles, we did meet with both Pat Howie and Ash over the last couple of months here just to fill them in personally about the new partnership and affiliation. But I did want to just provide some insight into our group and who we are. High level overview, our value proposition, where we think that we can help municipalities and utility services across the state of Iowa is historically groups have had to make one of 2 decisions. It's, do we work with our local agent and feel like we're generating revenue into our community, feel good about doing business locally, and in doing so maybe sacrifice some of the insurance market access or the expertise within our specific programs. That was one option. The other option was, do we go outside of our community and work with a larger agency that might have more tools, resources, insurance markets that a utility board really needs to feel like they're properly transferring risk to the insurance marketplace. Our firm, we feel like, gives a group like this the ability to have the best of both worlds. So United Risk Services would still continue to be the agency that is servicing the Stuart Municipal Utilities account. We have a location here in Stuart, 2 employees that work full-time within our office, Denise Durham and Diane Hawley. So the account would still be serviced locally. Myself, I am the lead advisor within our public entities program, which means that throughout the state of Iowa, I work with cities, counties, 28E organizations, utilities companies, and then school districts is primarily where I spend a bulk of my time. So I know the EMC program very well. I know the ICAP program, which I know that you were considering taking a proposal from another agency in the ICAP program. So I do know that one well, and we do represent that program to other groups that we work with. So I just want to provide a little bit of background and clarity since I'm newer to the group outside of Pat and Ash. So if you're okay with it, I'm going to stop there just to answer any questions around that before maybe diving into the specifics of the rule numbers and how the program is coming out for April 1st. Are there any questions that the board has at this time?
I think what I would be most interested in, Joel, is I have assured myself that you are a local agency. What I see happening here is something that always frustrated Lauren and I when we were in the agency, and that is access to multiple markets. We would get a good account and we couldn't find a place to put them because we couldn't reach the volume amount that the insurance company wanted. So that was a constant source of frustration. And knowing that United Risk is organized so that they now have access to those markets has to be a big plus for a local agency. So I see that as a plus.
You bet. And that's something that we're excited about partnering. We love the idea of still having a local presence because we recognize in order to really serve a city or a utility well, you have to have people in the community who really know what's going on, have a pulse of kind of current events and be able to know where the community stands. That's where we feel really good about our 2 representatives that work in the office at United Risk Services. They allow us to do that while having somebody who's a direct advisor on your accounts that knows, once again, the EMC program, knows ICAP, and knows some of the supplemental carriers that would be involved on it. CFC is the carrier that's on the cyber liability portion of the utilities insurance program and package. So I think it's important to have a balance of both. I would not be in the position that I'm in coming here. If we didn't have local representation, it's very hard for me to justify why you work with our group. But I think having the balance of both really serves the Stuart Utility Board well. So we're excited about the partnership.
Well, I look at the list of insurance companies that our agency now has access to. There are some excellent companies there. The list of that you're affiliated with is also a group of really quality agents as well. So just from our past experience. So.
Yeah.
The ownership's actually Iowa City, right, which is where you're
based out of Cedar Rapids.
Cedar Rapids.
That's correct. We, like I said, we have people in the community. We do have a physical location here. But yes, as far as the ownership, what we envision is bringing in somebody who is more in a agent producer position, similar to the role that I play. We'd like to recruit and develop talent here. Our model is typically we look for somebody to buy into local ownership. At this time, that is not a part of what we have for ownership breakdown, but we do feel like between having people in the community owning property here within this community, we feel really good about the local sense there. Any other questions before I move on to the specific renewal proposal? Okay. So in this packet, you see a breakdown or summary of where the coverage is renewing with EMC, with Cincinnati, and with CFC. So anytime I do one of these, some groups like a very high level overview, others really like to get into the weeds as far as rating basis changes, limit changes. If you're okay with it, I'll give kind of a general overview of where we're renewing this year, and then maybe open it up to any specific questions that the group has about EMC's and CFC's proposal there. So you'll see each of the policies broken out line by line. On the left-hand column, you are going to see where the policy renewed last year as of April 1st, 2021. Right-hand side, you're going to see where the renewal is coming in at April 1st of 2022. The one thing that I do want to note is this is an indication. What I want to do is present to the board, get a sense of it, and moving forward with EMC's renewal. And then typically our group would meet with Pat or other leaders just to talk through maybe some changes that you could look at with the program, things like deductible changes, which may be advantageous to the utilities this year. But this is just a overview of where the initial indication is coming in at. Like I said, the policy officially renews on April 1st. So general, you're going to see this year renewing at 8,147. Last year it was at 7,318, about an 11% increase there. Not a lot of changes to rating basis. This is purely a rate increase based on where the insurance market is currently. I won't get into a ton of detail there unless questions are asked, but we're in what's considered, meaning many lines of coverage are seeing pretty significant renewal based on loss ratios throughout the industry over the last year. The easiest one to point to is an event like derecho in 2020, one of the most costly weather events throughout the history of the Midwest. So we're seeing property rates have risen over the last couple of years to help correct for events like that, weather being a big one. So general liability is up about 11%. Commercial auto, we have the same amount of vehicles, same deductibles as last year. Last year that came in at $7,803. This year, $8,152, representing about a 4.5% increase. Most of that is driven by the auto liability market is once again seeing rate increases. Big portion of that you can imagine things like distract driving, jury awards of kind of nuclear claims verdicts based on big jury payouts. So it's not uncommon for us to see rate increases on auto. Linebacker coverage would be kind of like your public officials coverage. It covers employees and it covers the board for things like sexual harassment, discrimination, unfair hiring practices, kind of your directors and officers coverage. As your linebacker policy, that is up significantly, almost 25% this year. That's once again just an industry. There's not significant exposure changes. It is the market is kind of dictating a rise when it comes to that type of coverage offering. Commercial umbrella policy, you have $1 million umbrella. The rate increase on that is 3.3%. Honestly, that's lower than what we're seeing with most excess liability coverage when it comes to rate increases, so we feel good there. I should state the underlying coverages that the umbrella sits over, these three that we have on top, each have a $2 million per occurrence limit. Then the umbrella would sit over top of that. So in the event that there is an occurrence in which any of these policies would respond, the first $2 million comes from the underlying policy, the umbrella picks up the supplemental coverage beyond there for an additional $1 million. This is always a line item we're talking with municipal groups about, is looking at increasing excess liability just based on seeing higher nuclear verdicts. Jury awards are becoming more and more disadvantageous to municipalities and public groups. So we would always encourage a review of umbrella liability to see if we should be increasing that limit with the MC. Higher limits are available. For property coverage, we are seeing a significant increase of 21.5%. A little bit of that is there is inflationary adjustments to the underlying. You'll see a total blanket limit of coverage at 1.867 million, where last year that was at 1.8 million. Building coverage is up about 7%. The other line items are up at a 3% inflationary adjustment. So that's tacked onto the policy. Each year when it renews, you're gonna see a 3% increase for these different line items outside of the building coverage, which increases at 7%. That's so important is in a market like we're in, labor, material prices increasing significantly. These policies are on a replacement cost basis, meaning we need to insure to the true replacement of things like buildings, personal property, property in the open, based on material price increases and labor charges being more and more expensive. We think that inflationary rider should remain on. And every once in a while, we're sitting down with people like Pat to say, hey, should we be doing more of a thorough, full review of all of our property that's out there to make sure that we have the proper limits of replacement coverage in place for the utilities. So that's where the property is renewing at. Any questions there? The commercial output is specific for the utilities. So this is going to cover the buildings and exterior power generating equipment. So this is really what we would consider kind of the most crucial policy that the utilities has, because it's where a bulk or majority of the value of the assets that the utility owns, this is where it is covered at. So commercial output, it actually there's a favorable increase of 2.8% increase, where the inflationary adjustment rider was at 3%. So rating wise, we actually went down slightly, but there is a slight premium uptick. Equipment breakdown is if there is physical manifestation or damage. If equipment breaks down and we need to either replace equipment, fix equipment, or if there's a loss of income, that is where our equipment breakdown policy is going to kick in. EMC and ICAP both exclude equipment breakdown coverage on their form, which is for commercial output or power generating equipment. So that's where we need to go to the marketplace, and we utilize Cincinnati Insurance for our coverage here. So you're going to see the increase on this is a 23.75% increase, but it's not actually year over year. This policy was on a 3-year rate lock with Cincinnati. So that's what they're offering again, is for us to lock in rates over a 3-year period, but it's not a true year over year. This is actually where the insurance marketplace was priced at 3 years ago. And once again, with property claims, this is the result of direct damage and then equipment breakdown. And so weather events are typically driving losses with this type of coverage. So that's where we're seeing an increase on this line.
It doesn't cover just a breakdown, maybe something that's working on, say one of the generators has a problem and we have a bad relay and it doesn't cover that.
Not normal wear and tear. There has to be physical manifestation, some type of physical damage that we can look at and see. So that's the difference there. Crime coverage, this is very important as far as EMC's offering goes. There's not much of a renewal increase. It shows 9.76%. It's a $40 year over year increase. But the crime coverages are pretty significant compared to other competitors in the market. You're going to see an employee theft limit of $150,000, forgery and alteration, theft of monies and securities, and computer funds transfer fraud. The limit is $150,000. That is an aggregate limit for the policy, but we're seeing most competitors in this space have a limit of about $10,000 of coverage on this. So in the event that the utilities has some type of crime event in which monies or securities or theft takes place, EMC's offering for crime is above the marketplace, and one that we would recommend that the utilities continue to carry. From a workers' compensation standpoint, you'll see last year the policy renewed at about 7,581. This year it's renewing at 7,734. Experience bond didn't change much. It was a point. It wasn't actually a result of claims. It was the work comp rates go down, which they have over the past years. Expected losses go down as a result of that. So it's nothing that the utilities is doing as far as having new claims that popped on to increase that experience mod. It's actually the result of rate decreases. Your experience mod is just a score that NCCI, the National Council for Compensation Insurance, essentially assigned you based on what they expect for losses and what your losses are. It's a way for companies to either add or reduce premium based on what your history is on the account. So anything under 1 is typically viewed as favorable. Having a 0.92 here is very strong for the utilities. Then the last line item we'll talk about is the cyber coverage. That did increase significantly as far as percentage-wise. You're going to see the annual premium is $1,750. However, the offering from CFC within this program, for the premium that you're paying to have a $1 million limit on almost all line items, if you go outside of the program to see cyber coverage for a utility the size of Stuart's, we pulled the information. We see that generates about $4 million of annual revenue back to the city. To have this policy in place with $1 million limit, we would anticipate this in the normal marketplace to be in excess of 5,000. So the group's collective bargaining power within the EMC program and the safety group allows us access to a policy like this. So even though we're saying we are seeing an increase, we feel really, really good still about the fact that they're willing to offer a policy with such substantial limits. These respond in first and third party cases. So with our competitor in this situation, most of ICAP's first party offering for this renewal period is capped at $250,000. So that is a significant difference when it comes to our cyber exposure, just keeping in mind that $1 million limit. And all of the line items you'll see have different definitions of insurance or different ways that they'll you can see those all listed out on the left there.
Joe, that's one that's, is a pretty new coverage form, is it not? I mean, within, I think the last 2 or 3 years I was in the agency, they just started that coverage. And as they explained it to us, it would be silly for municipal coverage to not have that coverage for them. It's that critical for it to be there.
We view that internally as the #1 exposure that most municipalities face at this point. You know, historically, we've always insured for things like general liability, for workers' compensation based on statutory requirements, for auto liability based on statutory requirements. All those coverages are important, but where we're seeing the most claims activity just market-wide is related to cyber events. You can't scroll Google without seeing some type of news story that's out there.
And I think the state had some involvement in creating that as well, because they created a requirements that if you are hacked, there are certain things that you have to do.
Correct.
That cost a lot of money. And that's why it became imperative for us to put this coverage form on. So,
Yeah.
but it's been within the last probably 6 or 7 years that this has been available.
Yeah. To any municipality, honestly, carrying cyber coverage, it's first party and third party. So first by the insured, meaning the utility in this case for their own loss of data, their own financial loss. Third party limits are going to indemnify if the utility or whoever the at fault party is for third party limits will respond for lawsuits or claims from third parties against the utilities. So one of ICAP's offerings is they will allow third-party limits to go under their excess liability. So one of the big benefits that even our team presented ICAP, we will tell groups that, hey, third-party limits with the ICAP program are very strong because it flows through under the excess. But their first-party limit is capped at $250,000, where first-party here is at $1 million. So it is a pretty substantial difference. Most claims first hit first parties because you're the first one to notice that you have financial loss or loss of data. Third party typically comes later when others are affected. They source what the problem was, and then they start to file lawsuits based on it. The only other thing that I have listed here is just the safety program dividend payouts. So historically, the utility has been the beneficiary of the dividend program. This year is the first year we're not able to offer a dividend based on the profitability of the group holistically. That's not uncommon. Insurance carriers throughout the Midwest, people don't like to hear this, but insurance companies have not been profitable over the last several years in the safety. EMC, this is the first year that they haven't offered a dividend back. I know ICAP is a similar function. They offer vouchers to their members who have been members for long enough within their program. They have not offered vouchers for the last couple of years. So it's just the reflection of, insurance companies having pain points with paying out claims, severe weather events, nuclear verdicts, all the things that you can imagine. It's just a tough market right now. So unfortunately, the group was not able to distribute a dividend back this year. They are hopeful that that will be rectified in the coming year. But this is just a history of what Stuart, specifically Stuart Municipal Utilities, has received back in the form of dividend from.
I don't think a lot of people realize what happened with the derecho. Those were huge losses, mostly all in Iowa, and probably paid substantial amount of that was paid by Iowa insurance companies. The other thing I don't think a lot of realize is that a company like EMC or Allied or any of these companies, the wildfires that are happening out west with regularity also feeds in to increasing property premiums here. And that's a lot of people find it hard to understand that. But with the insurance mechanism, it's just the way it works. So
yeah, during our initial conversations, we have we do kind of an analytical breakdown of over the last 20 years, this is what billion-dollar weather events have looked like throughout the country, and it's CPI or inflation adjusted. So over the previous, I believe it's 25 years, on average, there were $5.7 billion weather events each year. In the last 5 years, I know last year there was 22, I believe. The year prior there were 20. And keep in mind, these are all inflation adjusted. We're not saying there was only 5, on average 25 years ago, because inflation, allowed for that. These are adjusted that way. So weather events are just becoming a lot more frequent. Derecho, you're right, the companies that write in the Midwest were the ones that had the biggest negative impact on that. But EMC and others, they go out, they have to purchase reinsurance to make sure that they're financially solvent. And a lot of times those are with national companies that their reinsurance costs are impacted by things like wildfires and other events that happen, not just within the Midwest. So derecho, I believe, was the costliest weather event in Midwest history. I believe that's accurate as of several weeks ago. So it's having an impact, and unfortunately, municipalities within a program like this, even with great loss history on it, utilities has had of that unprofitability has to be shared to make sure that a program is vibrant for all members. So Where you'll see here about an 11% increase without a lot of exposure changes. That is on the low end of what we're seeing within EMC's renewals, and on the low end of what we're seeing with ICAP member contribution increases that their anniversaries. So I hate to come in here and tell you an 11% increase is good news, but it's as good as what's being delivered to most groups like Stuart Municipal Utilities. The only other page that I want to hit on, which I provided in here, you're going to just see there are a number of items that we would want to walk through if there was kind of specific, hey, we want to know how the programs compare, or we want to know options for what the program could do to reduce some of the premium increases that we could potentially be seeing. Those, I would say the ones that are in bold would be kind of the priority, or what we consider kind of a big deal when you compare EMC's program to ICAP, or when you look at potential cost savings for the municipalities. So I don't know if you want to go through all these. You're probably tired of listening to me talk insurance. I've been up here for 10 to 15 minutes, but a big deal. We can look at about $1,500 in savings for property premiums if we look to increase our deductible from where it's at $1,000 now up to $5,000.
When's the last time we had a claim on property?
Not within the last 5 years. And the reality is it is a per occurrence deductible. So jumping from 1,000 to 5,000 seems like a lot when you think about all the property, but it's on an occurrence basis, meaning if derecho comes through and, does a ton of damage to each individual building and properties affected, the out-of-pocket expense of the utilities made a change would be $5,000 in that instance versus $1,000. But the previous 5 years, there have been no claims, and you're looking at saving about $1,500 annually by making that change. So that's something that we would tell you to definitely consider.
So that small change would have saved us the increase from last year to this year. Given that 5 years ago.
And that's correct. We still, like I said, part of why we put initial indication on this proposal is we still have plenty of time to make changes to the program. So what we typically do is present our initial findings, and then assuming that you do want to continue to move forward with the EMC program, I would meet with Pat and whoever else the board would want involved in the conversation around, do we want to make changes to deductible structure, and that the board can ultimately vote to improve that if needed. So,
I think one of the things that I was always impressed with working with Jester and AMC is the value added features of the EMC policy. There are things that they do that they don't charge for that always made things a lot easier for me as an agent. If Pat was concerned about some kind of OSHA situation, EMC has a program for an OSHA rated inspector to come out and tell us if we're compliant or not.
Yeah.
And that's at no charge. The attorney connect feature is one that's we found to be very valuable. So those value added things that you don't charge for are significant. I was used to enjoy going to one of Bob Jester's seminars because he had the best donuts in all the world.
very important.
Yeah, that's right.
There's
Crucial point.
information actually at the back of this packet about a few of the. So the Attorney Connect program, there's some information in there, and just some general overview about the program in general that's also provided in the pack. I'm going to fly through the rest of these just for the sake of time, everybody's time. There are differences when it comes to the loss of income and extra expense coverage. Like I said, we believe that the utilities is generating about $4 million of revenue. EMC has $1 million of loss of income and extra expense coverage, which we are confident that is the highest limit that you're going to find is very important in the event that there is some type of property damage in which you're not able to operate, you have a loss loss of income or extra expense in getting back up and running. There's a $250,000 premise personal property blanket, which allowed the prior agents to actually schedule more of the property at specific locations under business personal property. Even though some of the equipment will float, there's a $250,000 blanket limit if that property goes off-site. So it's just important, if you are going to consider other proposals, to make sure that the coverage limits are correct, because ours are scheduled under personal property on this form based on that blanket limit. If you go to a different carrier and they're not scheduling that as inland marine or floating or additional property coverage, it's not going to exist. So it would be a huge change for the utilities to consider. You have to really structure the program properly if you're going to do that. We talked about crime coverage with EMC. The offering compared to about a $10,000 limit, which is what we typically see, is drastically different. Again, equipment breakdown coverage that really needs to be enforced, in our opinion, for a utility. So once again, if you're going to look at another program, EMC and ICAP both exclude that for power generating equipment, which is why we've gone to Cincinnati to secure that coverage. So that really needs to be in place. If you're going to consider another proposal, just keep in mind looking at similar premiums. If that's not involved, that's a significant portion of what the utilities pays, but it's crucial. Liability coverage, water and sewer backup. I know that the utilities does provide water here locally. In the event that you are sued for a liability event where your constituents have water backup within their individual homes or businesses, your limit is the full policy limit. We know that there's sub-limits with other programs that you may be considering. So it's something that you'll want to keep in mind. Railroad contractual liability coverage, EMC includes that. Other programs do not. So when you go out and get your easement agreement with the railroad companies, they will typically require you to show proof of railroad contractual liability. You'd have to secure coverage elsewhere for other programs, to our knowledge. So something that you want to keep in mind if you consider other programs. We talked about the increases. If you do that on the auto, right now you have $100 deductibles. If you did increase to $500 deductibles, it would save you about $500 annually. There have not been a lot of auto claims historically. I believe there's one glass claim that paid out about $400. Your savings isn't as significant in doing it, but just something to consider if the utilities want to take on a little bit more risk to help reduce the premium increase impact. That's something that you could consider. Experience Mod is in a good position based on historic claims. We've talked about cyber already. And then just generally some things about EMC, their financial strength, they're A-rated, so strong financial carrier. John spoke to that a little bit already. They are admitted to do business here in the state of Iowa. They're a part of the Iowa Insurance Guarantee Association, which means that they become financially insolvent. The other members of that association, the other insurance companies, would kick in and pay claims based on that membership. The pool is not a member of that guarantee association, ICAP, so that's important to keep in mind. With the ICAP program, if you do decide to exit, if you enter and exit, you do take your claims with you. So it's a good retention tool, but something to keep in mind if you have open claims with that program and you leave, you take those with you. There would be the forfeiture of any future EMC safety group dividends if you leave the program at this point. So we showed the historicals there, just something for the utilities to keep in mind that historically, outside of this year, you've received a dividend back, which helps offset premium increases when the program. Then we're not sure, but typically we see that the city, in most instances, has to become a member of ICAP if they are going to insure the utilities. I don't know that for sure. So there may be a that's given to the utilities that's not contingent on the city becoming a member, but we don't know that for sure. We typically think it's best when the two organizations work so closely together that they be with the same carrier or group regardless, because when things come up, it's not two insurance companies pointing their fingers at each other saying you're responsible, but just something to keep in mind for the utilities that we typically see that being a requirement for you to move forward with that program as a component from the city. promise I'm done at this point unless you have any questions. Sorry to be thorough, but just given that we're new to the relationship, we want to make sure that we did an overview. So, any questions?
No, we will hear from. And then we'll go back.
Okay, sounds good. Thank you.
What's that? Yeah, the proposal from Town and Country Insurance, yeah.
Well, ours will be short. In filling out the application and everything for ICAP, they assured us that we would have time to get this done. Well, in the application process, they found out that Stuart generates some of their own power. And because of that, they have to do an inspection, and an inspection requires at least 60 days to get that done. So unless the board was willing to give us some extra time to get that done, ICAP is probably out of it for this year. But they're more than happy to come back and try to do it again next year. We just need a little more time.
So why can't, I guess, we're looking at an 11% increase with Xenia's water rate increases as well. I don't know why we wouldn't give the alternative a chance to get that bid.
Joe, our policy renews on April 1st, does it not?
That's correct.
So.
So if we renewed and then your bid was lower, then what's the refund process? If we're looking at 70,000, I guess a lot of questions with this. So are you for sure that you can come back in 2 months or not?
They assured us that they could.
So what does that hurt if we looked at these and maybe tweaked some of these numbers to try to drive this cost down to be more in line with last year? So looking at an 11% increase that Joe alluded to. Joe, right?
Yes.
Okay. And still allow him to come forward with his bid. We're not out anything.
But we've got a policy deadline.
But I just said we would continue to look at costs to redo this, right? Or redo, he gave us options right here.
What kind of problems does that give you, Joe?
Is there any kind of short rate cancel?
I'd have to look through the policy language. It's typical that insurance carriers will have short rate penalty language, meaning that any unearned premium past renewal date that doesn't become earned, there's a percentage in which the company's reserve penalized. I know specifically the general liability compensation insurance. The reason they do that is there's cost incurred with underwriting these policies, preparing them. You know, you spend all that time, you pay out commissions, and then you get a month into the policy period and it cancels. That's why they do that, to kind of protect their underwriting expense.
But it's not happened before, right? We're talking about one-offs and we don't know for sure. So these are a list of things that he offered to allow us to try to reduce costs. So what does it hurt to accept this, what he's asking, and reduce costs, and now also allow him to concurrently bid this as well? What if this bid comes back at $45,000, we took 7, and the short, whatever you call it, is $5,000?
You know, this is not something, we've done this for a long time.
Yeah.
But this is not something that we're gonna take the lowest bid. Take the lowest bid.
Right, but if we're looking at a huge rate increase on water, my concern is just, I don't know, you've got a large increase and, I don't know. I think we've got a true local agent as well versus, you know, I'm biased on this, you know.
These are both true local agents.
We write a check, this is my own personal opinion, we write a check for $70,000, it goes to Cedar Rapids. That's where it goes.
No, it doesn't. It goes to the agency and you want.
Okay. I don't agree with that. I mean, it's like with the people that we hire for.
But that's what happens.
Okay.
Training goes to the agency and you want.
Okay. And we're down a job on Main Street, right? Okay.
You still got an agency on Main Street.
Okay. Right. But that's like saying, Casey's, that's like saying Casey's is local or McDonald's is local. That's not the same thing. That's all I'm getting at. Is I view him as part of the community.
But
And I think he deserves that chance to have that option to bid. We voted that way
We
unanimously.
knew that 30 days ago.
Right.
And everybody knows that the policy renewal date is April 1st. And it's very difficult.
But if we accept this, we're not at any risk. We still renew, and maybe we can adjust some deductibles to bring that premium down.
Well, that's not a problem. We can do that before.
And then still allow him to collect information and maybe get us a lower bid that saves us some money that will allow us to offset this rate increase we're looking at with Xenia. I'm just looking at this, I
And if
guess,
it's not a viable option, or ICAP doesn't want to put quotes out there and expose anything that might hinder us next
How
year.
many municipal utilities does ICAP insure?
How many?
Yes.
There was two local ones that they do, Adele and Menlo, and Bridgewater too. But as far as their total number, I couldn't tell you that.
So do I hear a motion as to how we want to deal with this? During discussion on part of the board meeting.
So is there any way that we could discuss lowering some of these on here before April 1st?
Oh, sure.
Would that mean that we'd have to have a special meeting or what?
Yeah, well, not
With them.
here.
No, with them.
We could take it for what it is and then with the contingency that we were going to lower it before April 1st. We're going to adjust the deductible before April 1st.
And like I say, I mean, ICAP might not even agree to doing it. Because if it's not a viable option, if there's a short rate or something like that, we wouldn't expect the city to take on, or the utilities to take on an extra charge to give us the opportunity. If next year's a more viable option, that's perfectly fine too.
Well, I guess that the options we have here,
so why can't we just move on that? And then can you work with Ash and Joe to reduce the premium to get it level to where it was last year?
Ash and Joe and Pat.
Well, yeah, I mean, as far as like, but I mean,
Yeah.
that's 11,000. It's a
Wow.
lot.
I'm willing to do that. Sorry.
So you're gonna find out if ICAP can move forward or?
We can-
So when are we going to find that out?
We can make a phone call tomorrow.
Well, we've got an April 1st deadline.
Well, no, we
What are we
still
gonna
accept
do?
this proposal. I guess that, I may not be making myself clear. I'm saying accept the proposal, allow you guys to work on deductibles or whatever to bring the premium down more in line with last year and concurrently allow Tad to
But
pursue.
it sounds like you want to, once we accept this proposal for EMC, you want to leave the door open for somebody else to come in in August
Absolutely,
or September.
absolutely. If I can save my utility customers money by getting another bid at a lower cost and substantial, I would absolutely switch in a minute. I'm just being honest with you. That's, I mean,
Well,
anything to find out.
well, I think it would cost us something to find out.
How much costs us money for
So-
a bid?
How do we want to
Penalties
deal
for
with
not,
this? Go ahead.
Having it brought up now.
What's
We could
that?
get a penalty for not going in and saying by April 1st.
No, we'd still accept the bid. We'd still approve.
No, I understand, Ron,
Yeah.
but you're saying
So-
if it comes in later
Yeah.
and you think it's substantially less,
If it's-
which that
Right.
could be debatable as well,
Right.
but then we're gonna end up paying the penalty because we're gonna get short rated on the premium.
Okay, but if my savings is 20,000, my short rate's 5,000, I still save the utility customers 15,000.
If you're getting the same coverage, but we don't know if we're getting the same coverage.
That's all I'm trying to get is,
And we only have to- and he doesn't guarantee he can get it.
Well, I guarantee that we can't get it by April 1st.
He can't.
Okay, so in the meantime, you want to accept the EMC?
I'll make a
proposal.
motion.
Okay,
It's moved by Shirley. Is there a second?
I'll second.
Seconded by Craig.
okay, to accept the proposal presented by EMC for the dollar amount, and then Brian's request was to work with him on trying to go with the premium to the last year.
Yep,
Would be the motion.
yep, that would be the motion.
How do you vote?
How do you vote?
So
let's
you're
see,
walking-
Shirley?
Aye.
He's walking away from this, that motion, right? So you're saying you'd look at this next year?
Please go. Yeah. Okay, Shirley?
Aye.
Craig?
Aye.
Kim?
Aye.
Brian?
No.
John, aye. Okay. Number 7, senior rural water rate increase. What fun, huh, Gary?
Yeah. Tough act to follow.
Well, hello again, here at Benton Senior Water District. Last month's meeting here, I felt that the first one was to continue to look at spreading costs evenly to minimize the rate increase to Stuart. And the second request would be, if that's not possible, is there some way to get a feel for what our future rates going to be? And so, to answer request number 1, first thing I did was I re-reviewed the agreement. It's called a water purchase agreement between Xenia and the city of Stuart. And in that agreement, there's a specific language on how the rates are supposed to be calculated. And there's an assurance in there that we can't calculate the rates so that our other customers benefit from your rate, and we can't do it the other way. We can't have your rate be benefited by raising other customers' rates. I took that memo, that agreement, and then I generated some cost savings, and I passed both of those along to the board in a memo that I generated for their February 24th meeting. And then after that, when the board made their action, then I sent you guys all an email kind of summarizing all the information that I gathered, and then also included the memo that I generated to the board, and then the attachments that I had on it, which were the water service agreement and then 2 different calculations that I ran through. Based on the agreement's requirements, as far as how their rates are to be calculated, I presented 2 options to the board. One was to make the rates equal to what the cost of service calculation was, which is $4.63 per thousand, or they could approve the rates that they approved back in February or in January, which was $4.40 per thousand gallons. Given those 2 options, the staff recommended keeping or reapproving the $4.40 per thousand gallon rate, and the board unanimously approved that. So that addressed request number 1. Regarding request number 2, after I left here the next day, I emailed the Des Moines Waterworks COO, CEO, and CFO, and I asked them to give me their impression of what the rates are going to be, because that's what controls this whole thing. We react to their rates. And the next day, Amy Kaler, who was the Des Moines Waterworks CFO, she called me, and I asked her for an explanation as to why have we seen these rates and where do they think that they're going to go from here. And when she called me back, she said the rate increases that we've seen in the last 4 or 5 years, to quote her, were necessary to close a gap between the purchase capacity rate, which is the rate we pay Des Moines Waterworks, and what they do is the cost of service to provide that water to us. And in the past, Des Moines Waterworks has always completed those cost of service calculations in-house. But about 4 years ago, upon the request of a lot of the wholesale customers, they decided to have an outside entity do that cost of service study for them. And so they hired, I believe it was Raftellus, and when they started digging into the cost of service studies, they found that there was an error in the previous cost of service studies that were done in-house. And that error was the fact that not all assets were included in the rate of return for the purchase capacity rate. When they found that error, all of a sudden, the gap between what the rates were and what the cost of service studies were got very significant. And so they started, rather than do that all in one big chunk 4 years ago, they tried to do that in smaller bites and spread it over multiple years. When I asked Amy what the future looked like, she said, based on Raftellis's report last year, they see a rate increase somewhere in the neighborhood of 12% for next year. and then now bring the cost of service and the water rates back in line. That she said that the water rate should be a lot more along the lines of cost of service rates and not cost of living rates, and not trying to make up this gap that was there before. So that's the feedback that I got from Des Moines Waterworks to try to address the request number 2 that I received last month. So with that, I'll entertain any questions you have about that information or any of the information that was contained in the email that I sent to you back on the 30th. And hopefully everybody got that. I got the emails correct.
So the rate's still gonna be increased as the first proposal we had. You
Yes.
gave us a first proposal of
That's correct.
increasing the rate, nothing else changed.
Those same
You will
rates.
increase the rate again next year,
Estimated
It
12.
it all depends on what Des Moines Waterworks does to us.
12%, and then after that,
After that, they're looking at normal, just cost of living, 2-3% would be what they
When
would.
did that gap occur again?
Well, they had, like I said, over the years, the in-house staff always did those cost of service studies. It's a very complicated cost of service study because they have multiple different types of customers, and so those all have different rates. And so they did that in-house for years. I worked there for 30-plus years, and they always did those in-house. Some of the larger suburbs started questioning those rates because sometimes the inside cities rates would go up and they try to balance that out. And other times purchase capacity rates would go up and inside cities wouldn't. So they said, hey, why don't you ship that outside? And that way there's no impression that Des Moines Waterworks might be cooking the numbers to benefit the city, inside city customers versus purchase capacity customers. When they did that, they started looking at all the data that cost of service study, and they found that there was some feeder main being included in the rate of return. And so the cost of service studies that they're doing in-house and purchase capacity costs should be here. When Raftellus came in and said, no, if you look at those infrastructures that weren't included in the rate of return, now we've got this big gap here. And so to be able to pay their right rate, they had to try to make the adjustments on the rates to match the cost of service calculations.
So who else is impacted by that?
Everybody that Des Moines Waterworks serves, which is the mineral ethanol plant, they're the other wholesaler or bulk customer that we have.
Now, my question is there any sort of part of the agreement between Xenia and Des Moines Waterworks that prevents them from going back that far and going, oops, we made that mistake, now we're gonna bring this cost of service back up in line? Is there any sort of language in there that helps to prevent those sort of things from them going back that far to correct their mistakes?
They really didn't go back. They just said, okay, here's this gap. Now how do we because if you went back, they could say, well, that gap was there 5 years ago. So now you have to pay that difference 5 years ago and bring that all up. So they really just kind of, okay, we're here. And they could have, by our agreement with them, they could have said, hey, cost services study here, right here, we need to bump it up. But that was going to be one huge rate increase.
Sure.
So they decided to spread that out over 4 or 5 years.
I mean, I understand they're not coming back for their loss of revenue by that sold purchase capacity,
No.
but they're coming back and saying, well, now we need to increase, what we were missing. Whereas they could go, well, that was our mistake, we keep it where it's at and we just constantly do the increases of the 2-3 cost of living going forward and any increased cost of maintenance to those items.
Our agreement with them says that they charge us with the cost of services.
I'm just that's gonna lead to my second question, which is, it's gonna be exactly what Craig is trying to accomplish. You saying this year is the increase is gonna stay, and next year is 11-12%, because that's cost of living. Is there some sort of agreement that we can have on that? So a year from now, we don't want to change the subject, but go back to the same thing we're dealing with right now. If there's some sort of agreement that we can have to stay on what you just proposed.
The only way I
Without
can,
interrupting you, the reason I'm saying that too is even if the board will go along, which I don't know if you will or not, with the increase, we're still gonna have a study over that rate to how we're gonna pass it to the customer. So we need to know the future too, because we don't wanna have a study every year. We wanna study for the next 5 years, based on what I just tried to accomplish. Some sort of agreement that we know what the next 4 years or 5 years is gonna be.
So, I mean, it's just, if we hired somebody, because we didn't like how Ash was expensing water to our customers, we hired some outside company, they said they needed to increase rates. I mean, it's like you said, we're gonna go back and penalize them for their structure, or how he does things. I mean, I just don't understand that, why we're getting penalized for that. Month or Ash presented and said you're fine financially, and so this is, just, I mean, it's just a lot. You're looking at 9% over 2020, right? Or 2021,
9.7%.
over 21, and then 22 is another 9, and 12 for 2023. So we're at 30 over 3 years.
Well, if you look at one of the cost calculations that I did, and it was part of the information I sent you, it's Stuart rate data,
Is that on the last page?
second to last. It's the one that's in landscape. Back in 2017, when we were looking at rates for 2018, the cost of service study said that the cost to provide water to Stuart was $3.52. The board at that time, based on staff recommendation, was let's not raise it all the way up to $3.52, let's raise it to $3.57, which was strictly the 13 cents per thousand gallons that we got from Des Moines Water Works. And so if you look at that 15 cents per thousand gallons difference between what the cost of service study says and what the rates were, and your usage for that year, that was a $13,000 savings. The following year, we raised it 19 cents. Des Moines Water Works increase was 14. So we were 19 cents below what the cost of service rate was. You take that times 88,000 gallons you use, that's 16,000 for that year. When you start adding that up since 2018 and using the estimate for next year or for 2020, that's over $101,000 savings that we did not pass on to you, that the agreement says we could have. So we've already done some cost savings over what the cost of service study says.
So this is the refactored survey, or this, what is the savings that you're saying you didn't pass?
The savings are based on what the cost of service study said, that this is how much it costs to provide water to you. The board did not raise the rate up to that level. They raised it to a level that only added Des Moines Water Works increase. Our cost increase, we ate. And so that cost savings is 15, the difference between the cost of service and the rate, that column there, that's how much less the rates were compared to the cost of service.
And so I guess just because your costs go up, this group has had to be more efficient in years past. And I think this table that you put together really illustrates that. And the tables we looked at last month shows what the board did. They're a buffer to what Xenia is pushing on there. We're offering, the city's offering new water customers every year. The city's doing housing development. I don't know, 90 homes out there, Matt?
Yes.
I don't know, 80, 90 new homes out there. We've added all the developments happened over the last 10 years. So we're trying to grow as a community, giving you new customers. So to me, it looks like you guys are more inefficient, and the board's having to make up for that and be efficient.
I think if something's too inefficient, those are costs directly to us. If you go to Casey's and you pay $244, the next day you pay $274, that's a cost that you have to pay. I mean, we pay Des Moines Water Works to buy the water from them. When they raise their rates on us, that's not an inefficiency on us. And that's all we've been passing on the last 4 years, is just the rate of increase that we had from Des Moines Water Works. That's a direct out-of-pocket expense.
So the other ones
if you
have
look
not
at
passed
this,
on at all.
if you
What you're
look at,
saying?
if
The
we
other
would
ones-
have passed on everything
Yep.
that the cost of service did, you would be paying an extra $101,000 cumulatively for the last
So
5
the
years.
9% that is cost of.
That is strictly, the 40% increase is exactly what the Des Moines Water Works rate increases to us. I mean, that's a we pay. We don't, I mean, if we say that the cost of service is $463 and we're only charging $440, we're actually eating 23 cents per 1,000 gallons. That we could, the language in the agreement, we could pass that on to you. We chose not to because we thought we don't want to hit you with a big rate increase.
Gary, I guess it puzzles me that the amount of increase we've had in the last 5 years. And obviously the statistics here show the rates, what you're telling us is that you've made it easier for us because you haven't charged us as much as you could have. But I find it hard to believe, and maybe I don't know enough about this, that some misallocated assets on your, on your accounting has caused this much rate increase. Something else got to be driving this.
That's the information that was passed on to me. They have significant investment in infrastructure just to get water from their treatment plants out to the point where we take it and do our own thing from there. There's millions of, if you think about a 60-inch water main and 40.
Costing more to clean the water?
No, it was just the fact that when you calculate rates, you have a certain asset base that is used, treatment plant, distribution, pumps, all that. And you have a rate of return on that investment so that when those things wear out, you've got money to replace it. When they have to replace a pump, they don't come out and say, hey, we spent $2 million on a pump, you need to ante up. They have that built into the rate, so when that equipment runs out, wears out, that they've got the money to reinvest in it. And part of, I think the thing that I would say is that in reality, if the cost of service was as it is today and had those assets in there, we would be paying the same rate today. We would have just started it a lot earlier and you would have had a more gradual increase. Unfortunately, it was like this, and oh, now we got a problem. Now we have to try to make that difference up. And so ultimately, we would end up the same place today. We would have just had smaller rate increases for a number of years, and rather than the huge increases that we've seen in the last 4 or 5 years. Ending point's the same because the cost of service. This is how did we get there?
But the equipment that you have to buy to purify that water, to clean it, take it out of either the Des Moines or Raccoon River. And so what you're telling me is that the reason rates are going up is that you have to buy bigger and better purification equipment to do that.
No, they had the treatment plant costs were already in the cost of service. That was, and rate of return on that investment was all in there. The problem was that the pumps and the infrastructure drive clear out the 150th Street, 156th Street where we pick it up. All of those assets were not included in the rate of return on investment.
So you're telling us that if we can absorb this increase and the increase next year, that it should go back to a pretty much a cost of living increase at that point.
That is what Amy told me.
Now, like Ash said, can we get it, put it in writing? Can we get an
I'll have to
agreement?
make that request to them. I can't do that. I can't sit here and tell you that that's the way it's going to be for the next 5 years because I don't control that. I have no say in that whatsoever.
Well, I guess what troubles me with that is that because of here we sit in the Midwest, we've got more water than anybody else in the world in this area, in the Central America area. And it's cost us more and more and more to drink water. Now, I know other areas have worse problems than we do, but we shouldn't have to pay this much money for the amount of water that's around here.
I would agree with your quantity statement that you just made, but the quality is not good. I mean, I don't know if you read the DNR thing, half of the waterways in Iowa, you're not even supposed to recreate in, much less drink.
And does that not cost you more to clean that up?
It does. That's part of the rate increase, but part of a bigger part was this fact that they did not properly have all of the assets in there when they did their rate of return. I mean, I can ask Amy, I can ask Amy, I know her, I worked with her for 30+ years, I can ask her and say, hey, can you give us something in writing that says what I said here? I guarantee that, I don't know.
I can't,
Much like me, I don't make the final decisions, I make a recommendation to the board and they make those decisions.
I guess I can't, it's hard for me to believe that an enterprise of that size and sophistication can't look out and, has the assets and revenue to deal with like a 5-year contract on rates. Why can't, why, and I know you have to ask them, but I find it hard to believe that Des Moines Water Works doesn't have the wherewithal to sit down and do some municipal planning and determine that, maybe if we did this, we could save all of our water customers, whether they're bulk or Xenia customers or whatever, over time could save them money. It's almost like they're saying, well, it is what it is, so take it or leave it. And I'm not sure we as a bulk customer of Xenia, I'm not sure we have to take that.
Well, I assume that you read my email that I
I
sent you.
I did.
And the first part of that email at the bottom was the email that I sent to the Des Moines Water Works board. And I told them, this very conversation, I said, we've got customers out there that may not be customers anymore. And if they're not customers of ours, they're not customers of yours. And sorry, if you're concerned with that, can we maybe, instead of 12% next year, can we, do that and spread that over 3 or 4 years? I heard chirping noise when I sent that thing, and they did what they did. Based on what Rap tells us, the
At least
outside
they gave us some number. I mean, at least they're upfront about 12%,
Yeah.
which is, not that,
I
that's what you
can,
want to
I
hear.
can
but at
ask
least
her
they're-
if she wants. I'll see what I can get from them
If
because
they could come to an agreement for over 5 years, and I just find it hard to believe that an organization like that couldn't engage in that kind of plan. Maybe I'm
well,
naive, but
like I said, I was in that utility for over 30 years, and I know things do change. I mean, 1 year you got nitrates coming out of the ears, and you have to run a nitrate facility. That's not a cheap facility to run. Next year it's not there. Or 1 year you got tons of water sales because it's dry and people are irrigating their yard like crazy. Revenue's way up. Well, the next year we got floods and nobody's irrigating their yard, so now your use is way down. Nobody has a crystal ball that can predict those type of things to that type of degree to give you a guarantee. I truly believe Amy when she told me this was a snafu and cost of service study information. And once we get whatever the rate increases next year, then we should be on par and not have that gap that we have to try to address.
And we respect that, we're not asking for guarantee, we just asking for commitment.
And this is,
Well, I can ask her if she put in writing what I told you, is that adequate?
Yeah.
Okay, I can do that. If you're gonna say that this is stamped and no way can it vary, I don't think she'll do that. And I wouldn't do that if I
It's a
said,
guarantee, that nobody in the right frame of mind will ask for that. We
okay,
just need commitment,
okay,
we can.
she'll
Because
definitely
we're
do that.
gonna take that rate increase to give somebody to do us a rate study, and we're gonna spend money to get somebody outside of the organization to tell us what to do in the next 5 years, if we have the commitment.
Well,
So we need to be all on the same page.
if
that's what I'm
that,
saying.
if that'll
We
satisfy.
have to do that planning, Gary.
I have to too. Whenever they give me a rate increase, I have to react to that too. I mean, it's, like I said, I have no control. The only thing I could do as a consumer, write the board, let them know what I'm facing as a utility director based on what they're doing to me. And that's the extent of what I have.
Now, you
Power.
open the door here a little bit, and you allowed me to get up on my soapbox, okay?
Not a problem.
But the bottom line here is, and I've said this before, and I'm gonna say it again. I sit here as a trustee of the Stuart Municipal Utilities, water utilities, and I watch these increases come up. And I see the legislature sitting in there on their hands and will not to assist cleaning up the water in Iowa. It would save a tremendous amount, it would save these kinds if they were to do something like that.
Preaching to the choir.
I
I
know,
was there
that's what I
when-
say,
I was there
don't
when-
mean to get
when
up on the
Water Cat did,
soapbox,
yeah.
but
No, that's,
and I'm not pointing the blame at anybody for making our water dirty. There's, everybody in this, in the state of Iowa is responsible for that.
the responsibility of the beneficiary of that.
Right, or the beneficiary, yeah. And for them to sit in there and thumb their nose at the idea of some kind of clean up the water in this state is criminal. It's criminal.
I would not disagree with anyone.
Now, I can probably have, you know, I can fill the room up by saying that of either farmers or landscapers or whatever who do that kind of work. But it's not farmers. We have municipalities in this state who contribute more to filthy water than farmers do. If you put them in the aggregate, if you accumulate all of that. A lot of these, there's a lot of small towns in Iowa who create a lot of pollution. Now, our city council, what was it, Brian, 10, 12 years ago, we put the new sewer.
Yeah, but before that, I mean,
Before that,
it wasn't.
I went in and saw that, because I had to write the coverage on that stuff. And the filter plant they had, I can't tell you what it looked like. I'm glad Jim Henderson, Forrest, you know what it was like. But they spent a lot of money. And the water that comes out of our sewer treatment plant is almost potable. And we need the legislature to come in and help municipalities the same way they did with us. They need to come in and require that those municipalities live up to a water quality standard. And until they do that, we're gonna look at this kind of stuff year in and year out.
Yeah, when they came out with the nitrate reduction strategy, where everybody had to decrease their nitrates, they hit the wastewater treatment plants hard because that's a point source and they can monitor it
That's right.
and charge them and whatever. And then to make something like that voluntary, that's never gonna work.
Isn't
And
it?
it's nothing against the farmers.
No,
I mean, why would one farmer want to do everything he can to clean up the water and all of his neighbors are not doing anything? That's gonna hurt his bottom line, and he's not really helping if he's the only one doing it, so.
but you look at the state of Minnesota, who has a very reasonable water, and
they've seen a lot of benefits.
they've seen a lot of benefits too. So enough of the soapbox. I'm sorry.
Well, I will get, I'll get with Amy tomorrow and see what she can give me as far as their look-see. Again, it's nothing that she as an individual can say, this is the way it's gonna be, because they make recommendations to the board. But that would be, my read on her comments to me is that would be the recommendations they would make to the board. And for all intents and purposes, the board normally follows that. And so I don't think it's anything that she's gonna say one thing and then have something drastically different. But I don't think she's gonna wanna stamp it and say, hey, I guarantee you, this is what your rates are gonna be. But she'd give us what their next 4 or 5 years projected looks like at this point.
That's what we would ask for.
So
Okay.
two questions, and you're looking for more than just a soft email, but you want some, not a contract, but some sort of, some sort of,
Now,
commitment.
whatever I get, I'll pass on to all of you like I did back on February 25th. And if there's something else that we would like to see at that point in time, let me know and I'll see what I can do.
And Gary, any other comments from the board?
yes, one more
Questions?
question. Who sits on your board? How does that process work? I don't know how that works, but does it come from your utility customers?
It has to be, you have to be a customer, we call them members.
Yeah.
You have to be a member, and then you have to run for a position on the board, and then it's a vote of all the members. And we have 7 board members, and they're alternating 3-year commitments, so we have usually 2 coming up for reelection every year, but then the 3rd year we have 3.
Is there anybody from this area that you know of that's?
We had a gal that put her name in the hat for this year. Sorry, I'm terrible with names on her, but she's her address is Stuart, but she's one of our customers.
She put her name in, but when.
She put her name in,
It was not elected or hasn't happened?
It hasn't happened.
Okay.
We have our annual meeting every April. And so we usually send out information in February to let people know, hey, this is coming up. Here's the number of positions that we have open. And if you're interested, put your name in a hat. And then once they do put their name in a hat, we get a small bio form. And then we send out what we call a proxy sheet that has, here's who's running, and you can vote for 1, 2, or 3, whatever the number is that year. And then they send those proxies in, or they can come to our annual meeting. We count up the votes, and whoever has the most votes, et cetera.
One last thing on this
Go ahead,
last
Brian.
page that Gary's given us. If you guys want to look at how you have handled, what distribution of this ash, there's a usage table that's he sent us, 2005 and 10. Then you might have to answer this one.
I would gather that probably most of them are in between, most of them would probably be in the 2,000, and then you probably got people that are maybe up to 5,000 gallons a month.
So like 50% the first month. So if you guys ever, if you guys, this is fairly realistic comparison according to what I guess you guys have said. So you're charging your Xenia customer for the same quantity of water, $65, and we're charging ours $51.
Yes,
Right.
for the 2,000 gallons.
So if you've got 50% of your customers, you're saving them about 20% on your, so I mean, if you're wondering if you're doing the right thing, you are. The problem is the input costs, insurance and all this stuff just drives me nuts. So I mean, it's, I don't know.
Yeah, it's over the cost.
I know, but I mean, it's double now. The year before, 2020 was 5%. Now we're
And that's
at
why
9%.
so we have the whole thing.
Just
planned,
what's-
you know.
what's, you know, not a crystal ball, but give us some concrete planning as to what they think it's gonna
To
be.
just,
I can-
to just confirm what Ryan's saying, because we're really not just locked into
This
that
margin
in
is
case
going
of rain.
Yeah.
This
We have
margin's gonna
million
dissipate.
things
I'm trying
around
to
it.
say, I guess.
We have insurance to pay, we have bail to be, we have a lot of stuff. I personally plan to have all these things to have my comprehensive plan for the whole city. So by you helping us getting that commitment, it would help me for the next 5 years. To
But see,
plan
that-
for the
I guess
organization.
what I'm trying to say is this is what the board has been able to do.
Yes.
This isn't something that's going to, this is going to get continually squeezed unless we try to.
Absolutely.
That's my whole point with insurance.
I couldn't agree with you anymore, yes.
All this stuff.
Yes, I couldn't agree with you.
Part of
Anything
that
else?
calculation is the bottom row there, which is what we in turn charge Stuart for those same quantities of water. So you can see the spread there too.
Anything else? And Gary, I appreciate you coming.
Thank you,
Spending the time.
thank you.
I really do, I promise. It's.
Thanks.
Sorry, it has to be the bearer of bad
Thank you
news.
for this
No, I know,
information.
but at the same time, I have to tell you that the water, the quality of water we get from Xenia is second to none. I mean, let's face it, even if we were to look at something like that, and we may, you know, but we know that it's not gonna be the quality we get from Xenia. Am I right with that?
Yeah, that's very true.
And, you know, so we have to be very careful with that, but at the same time, we're like you, we gotta respond to our ratepayers. And when they see this again, they're not gonna be happy, so.
We're all doing what we can. Thank you for
Thanks for your time.
helping us and working with us.
Welcome, and I'll get that information.
Okay, good.
Thank
All right, thanks, everybody.
Next item on our agenda, what is it? Oh, here it is. Electric reliability plan. Pat, is this you?
Utility attorney.
Oh, I'm sorry. Number 8, utility attorney proposal.
Okay, we were searching for having a new attorney and we received a proposal from Dwayne. Dwayne has been working with us now on the, work county issue. If you, have you looked at the
Is
proposal?
this the Kearns Board's place or not?
This is the one going.
Okay, so the city had started looking at, I can't remember. It's not.
It was presented to the
What's
city.
this?
Mitchell.
Mitchell Kearns is a local boy, Becky Whitmore, Darcy Kearns' son, and this is their firm. The city adopted him, is that right?
City tabled it to Monday meeting.
Anyway, so a little bit of, it's local.
If you're good with that,
And I think their number looks really good.
okay, we need a motion to approve hires and other utility.
I'll make a motion.
I'll say,
Sure, you second, but,
Um,
okay, vote.
so, then moved and seconded, to make Don our attorney.
Yes.
Craig, how do you vote?
Aye.
Kim,
Aye.
Brian?
Yep.
I vote aye. Shirley? Okay. And number 9, now we'll do the electric reliability plan.
Okay, so, I mean, it sounds like grandiose, but it's really not. This is something we've been doing ever since I've been a lineman, which is longer than I want to admit. It's been a long time. This is direct from the Iowa Utilities Board. And all it is they have us inspect part of our electrical system, basically 10% of it every year, and then every 10 years you start over. So what it is every 10 years, they want the board to say, yes, we're still doing it, and come up with a few changes. They used to actually send out inspectors. Now we gotta go do it and send it to them. So we don't even send out inspectors. But all this is just signing back up with Iowa Utilities Board saying that we are committed and we're gonna keep doing it. We have to do this every 10 years.
So when we do this, we don't get inspected as much, is that what you're saying? Okay.
We haven't seen an inspector in 3 years. They have a hard time hiring inspectors and keeping them. So this is, as far as I understand it, this is their way of inspections, which we normally do. We've done this for years. We're gonna do the inspections, but we're gonna send the information to them instead of them coming out. So it's something we just kind of got to renew every 10 years with them and say we're still doing it. And that's basically all it is. It's nothing that we haven't been doing for years and years and years. It's just a little bit.
Any discussion or questions? Do I hear a motion?
I'll make it.
And a second?
I'll second.
And we'll proceed to vote. Kim?
Yes.
Brian?
Yep.
I vote aye. Shirley?
Aye.
And Craig?
Aye.
Okay. You need me to say this? Okay. Number 10, information technology equipment policy.
This is a policy that we gathered together, Mike and I worked on it, we presented to the council, and the council approved it, and always this kind of policy, we have it shared between utility and city. The city approved this policy, and so, the utility must approve it, things like to, just a generic one for the laptops and other stuff that they use when they take it home. The laptops in front of you now, that new technology now that you have here, you're able to get into and find anything you need, because it's a minute or agenda, all that stuff. So we kind of did our research, Mike and I, and got some other cities policy, and just applying policy. City approved this one.
Okay.
So we need to approve.
Any questions, comments? If not, we'll proceed to vote. I need a motion.
I'll motion.
Second?
second.
And proceed to vote. Brian?
Yeah.
I vote aye. Shirley?
Aye.
Craig?
Aye.
Kim?
Aye.
Okay. Item number 11.
Okay, I'll be brief and to our monthly report. We are at the first report is a financial report. The first page shows how much we have in the bank, which is 5.3 million. Second page shows year to date from July 1st to the end of February. We have a plus number of 152,000. Page 3 shows where we are with our budget. Our budget is 4.1 million. It's been 2.1. We have a 1.9 remaining, so we're doing good on the budget. Page 4 shows months to date what we did from February 1st to the end of February. We have a plus number of 1,741. So financially, we're doing good. The next report is a breakdown of the budget between sales tax, water, electric, insufficient fund, customer deposit. As you see, we're still within our budget. We're doing good. Go to the next report of the delinquent account. We have 3 people added to that account with the check mark on the right and left. One shows on first page 1, other one shows on page 2 without saying names. The last one shows on page 3 without saying names, and that takes us to the end of the report, which is page 5. The next report is the delinquent account paid in full. We have 3 people with the check marks on the right and left, shows on page 2 as well. And then another one on page 5 at the bottom. And that takes us to page 8 with the end of the report. Next report is the payment agreement, has 5 with the check marks on the right and left. We added those 5. Next report is the paid in full payment agreement. We only have one, will be shown on page 4. And that takes us to the end of the report on page 6. Next report, budget billing, no change on the budget billing. Next report is deceased and bankrupt, no change. The activity on the offset program that we have year to date.
Is this the amount we got in this month? 22, this month. Is that what we got this month or this year or?
That's what's overpayment
It's
from the past,
Oh,
The
okay.
amount owed was 53, the amount collected was 45,
I see.
and that's it. That takes care of that.
Any questions about the report?
Yeah.
Thanks, Ash.
Thank you, sir. Thank you. Okay, last one, we're not going into closed session.
Okay,
Just kind of talking about it here, and we provided you with 2 letters prepared by Chip, and I really don't want to start this
well,
thing.
when Brian and I met with Chip, and Ash and Mike and Pat, Ben, you were there, I think, too. The
Yes.
2 of you guys were there. Just to try to get our arms around, start down a path with this thing. And one of the things we asked for was to write a letter, to send a letter to Xenia. And Chip was kind enough to do that for us. And I think there's a copy of that letter in your packet. And I guess the discussion we need to have is, do we want to send this letter to Xenia? And if so, is there any revisions that any board members would like to make here? Brian, I think Brian said you had.
I will, just the highest number with the most recent is going to, come off the page. I was thinking just put, the last 3 years on there, just so it's in their face, but I mean, it is what it is. I mean, this guy's literally going back and a month later coming back saying, we're saving you money that we could be jacking you with, so they gave him a month to kind of recover. But at the same time, I mean, part of this meeting was, what are the alternatives, I am completely new to any of this information, so asking questions and Ben's probably laughing at me. Some of them I ask, but
No.
I mean, all I'm getting at is these, we can't pass this to our customers. I mean, that's just not sustainable long term. So I
It
mean,
is not sustainable.
Yeah.
And I think Chip put that in his letter.
yeah,
And, so we have to raise the red flag here.
I got no problem with the letter at all.
No, I don't either.
Don't have any other options.
If you want to put some additions in there, feel free.
Yeah, I mean, he's got them in this other one, just calling out these 3 bullet points that 10, 10, and 12, but
Yeah.
It-
I guess my thinking about this, and Ash may shoot me here, but we've done this, we've seen these rate increases the last several years. And according to him, next year may be the last. Now, there's a lot of volatility in what's happening with water in the region. And I think some of that is gonna clarify at the end of this year when they decide whether they're gonna go with this regional water authority. Chip or Forrest, do you have any indication of what's gonna happen with that? I'm unfair asking that question.
So far, the reading I'm getting is that the western suburbs at least are looking to join with Des Moines in forming that regional water utility. That seems to be the fuzzy crystal ball, whether it will happen or not. They're just passing resolution saying that we are interested in joining it. What that means to the rates, don't know that either.
And I think, I guess from what I read about this, it's not, water rates are never gonna go down. We're never gonna see water rates go down. And, but the regional water authority is supposed to begin to level out these kinds of increases because they're massing all of their assets into one company, one authority. And then there's gonna be one board that's gonna handle all of it. The only way you get access to that is if you're buying directly from Des Moines Water Works, which we are not. But I guess I wanna say that, Kim, did you have a comment? I guess the comment I would make is that as much as it galls me to say it, maybe we modify this rate increase to our customers for at least one more year, just to see what's gonna happen, because I think there may be some potential here with what's happening in the water market. That a lot of this is gonna begin to level off. I guess that's wishful thinking on my part, but I don't know, that's the thought I had here. Is that swallow this for one more year and then, and we don't have to do this yet, we could wait till next week to do it, because until Gary gets back, if he can give us some kind of commitment, would be helpful in making this decision too.
Yes, it would be our help if he gets back to us. I'll be sitting with Chad. We've done that before, and we're able to absorb a lot of the cost.
see,
But I need
sorry,
to-
it just irks me because
Oh, I know, Brian,
we have to be, you guys have been more efficient than somebody we're handing business to off of growth of our community. It drives me insane. It's the economies of scale, If you have more customers, you should be able to offer a better value. So we're not, maybe we're asking more of our employees because we can't hire me, we're not buying equipment because we should, because we're not wanting to hit our customers with a large rate increase, that we're getting kicked. So
and
it's
what's
just
really,
frustrating, I guess.
and I understand what you're saying, as we get more people on our water line.
Right.
We ought to see,
That's business, right? Should be.
well, but I've always been the opinion, correct me if I'm wrong here,
Yes.
but always been of the opinion that we make money selling electricity. We don't make money selling water.
If it goes the way he presented to us, 9, 12, and then 2, 3, 4, that's an average of
But I don't
3%.
There's just not the credibility there for
I-
the buyer.
That's why I'm
all saying.
asking, that's why he left with what we told him, because if he stuck with what he told us, that's an average of 3, 4%, which was fair.
Okay, so we eat this 20, we eat 30%.
That's what I'm trying to get to.
Yeah, so
Yes.
go back to the doc, I mean, use his information
Yes.
and take the 30%. So here, I just brought this up, so we think most of our customers are half fit in this grid. So we're 10 to 15% more, or excuse me, 20 to 30% more efficient than Xenia is in providing water.
Yes.
So the 21% is just chewing away at that margin, right?
Yeah.
If we don't pass any of it.
Yeah.
What the heck did we do to deserve that? Oh, it's all in that. So let's
Absolutely.
say options, what are
Absolutely.
the other options?
And that's what we're
So
trying
we're
to
stealing from our
pass to
base.
the public. Yeah, you're right. You're absolutely right. We're trying to kind of, it's like trying to get the guys to hold on buying a truck or something. You see, this is what we do for the last 10 years.
What are we not providing to our employees or our
Yeah.
citizens? Because we won't go back to.
Well, here, let's face it, and Ben, correct me if I'm wrong, or Pat, that if we went away, if we drill our own well or another one and bought the purification equipment to clean it up, to make it potable, we would still not have as clean a water as we get from Xenia right now.
Well, if we built a new treatment plant, go back in service, we could produce water equal to the quality that they produce water. But we'd be paying off such a large loan. You know, you're paying off a $6 million loan. By the time you pay for the production cost and pay that $6 million loan, it's not gonna save anything.
So what is it? And this is again, just a random thought, but we shared costs with Xenia to run a line out here. From where did that start?
Well,
Street, and
That's where ours started. So what, just asking this question, what if we bought this line? Are those options or?
okay, so we helped, 20 years ago, we entered into the agreement to put that in. They would maintain it after that. That cost us $1 million. We paid on that for 20 years. We have finally just paid it off. We just finally, we have that now. So now we will not make that payment anymore, but we're still buying that water at that rate. So we are finally realizing that.
So does that help with this cost compression that you've got here with buying water? That loan's gone. Allowed us to absorb more of that 21%.
Although,
So I can do the study.
What's that?
Ben, that's why I
Well-
commitment, so I can do the study for 5 years.
I'm just trying to put
That's
these pieces
exactly-
together and understand.
Ben, go ahead.
just to be fair,
Yeah.
that money that we have been paying on that money is what we will put towards this project we are entering into. This large-scale tower and main project to our customers. That's how that works out, that we're able to enter into this project we're going into. We have finished that, and now we're entering into this.
That was the intent when we started down this road, was that we wouldn't have to increase rates because of the water project. And I think we're gonna.
Yeah, that's exactly what,
In
it's
2000
exactly like.
in 2019, before 30% increase in water.
Yeah, I think I've been good in it, like, trying to go from one to another without getting the customer involved. You see, we, here in 2-3 months, we'll be making the last payment on the water. So we don't have any data on the water after June 2nd. And then we're gonna switch to go to the new project, with the same amount we were paying here, we pay that on the new project.
Is it
And that
affordable
has
with the rate increase? If we have to eat 21%, is it still affordable under the last model to eat?
We have to start here, I can't give you an answer, because I'm just trying to confirm what Ben is trying to give you, how we're moving on with our situation. Like, we're going from one, dropping one, going to another one, with the benefit of getting a bigger scale water tower. Customer won't be affected here with the rate. The rate is coming here, in order for us to do the study, in order for me to set this chair, I can't just do a rate study based on 1 year. It's still
Right,
me and then
right.
up in the
Sure.
air. I gotta have to have 4 or 5
Yeah.
years from him, so I can study this with the new loan that we're getting into. So it's comprehensive study, not just a particular issue, which is the 9% that he's given. Can we absorb it? We might, yeah, we might be able.
And I think that's part of the volatility that we're dealing with. You know, we've got this water tower and the water project going at the same time. And, yeah, we can predict what might happen with that, but we really don't know. We really don't know what the total amount of our actually. So, you know, I think we've just gotta, you know, my feeling, my thoughts on this are, let's swallow this, you know, maybe increase it by 3% or something like we have in the past. And to help our ratepayers as much as we can. And hopefully, we can get some kind of commitment where we can do a little planning. And maybe if we did that and they come with a 12% increase next year, maybe we will be in a position to reduce it somehow, you know? So, but we don't have to, I want Gary to come back with the information that he has before we end up making a decision on this rate increase, and how much it's gonna be.
Everybody is okay, or is there more discussion on this letter? Is that okay for everybody to, or
I
does anybody have
think,
any objections to sending that?
anybody have any objections to us sending that letter?
Can I offer one thought?
Go
I
ahead.
know you feel like you don't have a voice with Des Moines Waterworks.
Feel like?
Hear me out.
Good point.
It still would be important, I think, and this was included in there, but this is the board's letter, but, so just keep that in mind. I would think it's a fair idea to copy Des Moines Waterworks in that letter.
Okay, yeah, we can do that.
It's no harm.
Yeah, that's a
Okay,
good
so if
idea.
you're good with that, we need a motion to approve that letter to be sent to.
I'll mail it for you.
Jamie.
Can we put this in our utility bills so our customers know that there's,
Well, we're making everything public.
that's what I'm saying. I mean, more information's better when you.
Yeah, I agree, Brad.
You know?
And this information we're looking at, I don't have a problem. Sure.
I guess I just-
We'll put it in the utility bills.
Do I hear a motion on sending the
We
letter?
already made a motion.
Made it
Brad made
twice.
the motion.
3 times.
Second.
I'll second.
Saying that we.
So the vote will be, I vote aye. And Shirley,
Aye.
Craig,
Aye.
Kim, and Brian.
Yeah.
Okay,
Okay. Unless,
Are we still on 12,
I'm still on board.
any more discussion? I mean, when we met with Ben and Pat, there was 6 or 8 people in there. We looked at all sorts of different alternatives. I don't know if anybody wants to ask questions. Forrest is here. I mean, everybody's here if there's questions.
well, I think one of them was, you know, what's the potential of us opening another well, putting up a treatment plant, you know? Ash said that's a possibility, but Ben is right. You're talking about another $6 million loan, you know?
But
I'm not sure
it is
what-
very cost prohibitive is what I guess. I mean, that was new, it was good information for me to hear.
And,
That's all.
yeah, Ben says we can generate or produce the same quality of water that we get from Xenia. But I sure wouldn't want to have people coming in here telling us, God, the water's so bad that I gotta put a water softener in, you know? We've gotten away from that.
Right.
We've had to do that for years and.
So if you don't mind, I guess, going back through the ASR option, just real brief.
But situation, that's, Forrest can correct me. The idea of the ASR is if you have abundant water or cheap water one part of the year and not another part of the year, that's a way where you store that water until when the cost or availability of water is different, then you can retrieve that water. That's the idea. The water we buy all year round. And same else, I mean, that water is available all year round. So for us to try and, essentially what you're doing now, you're stockpiling water. For us, that doesn't really work. We don't have one specific time where the water is more abundant or one specific time when the water is cheap.
We don't know when that's gonna happen.
But that,
In winter demand, like all winter long, you stuff water down there, and then in the summer, you pull it back out. Well, if we buy a bunch of extra water from Xenia, it costs just as much when we buy it now as if we bought it.
but we can change that scale to have a peak and a low rate. That option is offered by Des Moines Waterworks to some of their clients, their customers that do that. I mean, it falls in that. But I don't know if we would consume enough volume to offset the cost of, what's something like that
But
cost?
is that available to Xenia?
Yeah, they're offered that from Des Moines Waterworks, and then they offer it to their customers. But I mean, I don't know if we consume enough water like these suburban communities would, right? They're making that, they're recouping that. So if we were talking about that meeting, what's your recoupment period? How many years do you think you
Yeah.
get back?
Your payback, yeah.
So, I mean, what's something like that cost?
Million or two.
Million or two?
And Ben's explanation is correct. I mean, that's why some of the suburbs are doing it, is they're buying cheap water from Des Moines Waterworks in the winter and then using it in the summer because they have two rate structures going on with Des Moines Waterworks. Whether Stuart could talk.
Whether Xenia would let us do that or
Yeah.
not.
Maybe, I don't know.
Anything else about that?
I'd like to discuss with the board the gas utility and potentially pulling some information together to present to the board off of other communities that have done that. Just to see if that's an additional revenue source that we could look at. Whether it works or not, I don't know, but I'd like to at least get that together.
The existing gas infrastructure is very aged. I wouldn't want to. It's probably not something we would just go buy Mid-America's gas system in town, because it's old and falling apart. It would be something that if we did buy it, we'd be making some big improvements on it. Spending more money there, but it doesn't hurt to look.
No, I agree with that.
It doesn't hurt to look and see what options are.
Yeah.
Or, Chip, will you walk through that a little bit? I mean, what Orange City's done, I mean, that's the first town that,
So around 2003, I think it was, or mid-2000s, Orange City had started a process of condemning the gas system. I think it was Mid-American that had previously owned theirs, because they wanted city ownership of it. And they have local control of all their utilities there. And they wanted to have local determination of what the rates would be. And they can do some future purchase capacity with their gas purchases. And there's a group, I forget the name of it, but they went together and did a major bulk purchase of, I think it was $200 or $300 million.
It'd be similar to Summit.
Right, and they do a few future purchase over upcoming years, and there was more benefit if the city owned that infrastructure, sold it, because I think gas has a pretty high margin of markup on it. Maybe at the other end of the spectrum versus what water is. So that's a route they went, and I think the city of Traer also did it up on Waterloo. And one member of Seneca that has gas, I know it's Corning, they have all their utilities of the city except internet. That's a utility. So there's ideas out there, and there's folks at the Iowa Association of Municipal Utilities. They could come and visit about it, talk about the process.
So, yeah, thank you very much for running through that. I'm just looking at, I've talked to the individual in Orange City once, and it's just about, it's a 4-year turn time. This isn't something you just go, do, I mean, you
It's
gotta
gonna
go
take a
through, I
while.
think it's a public vote requirement too.
I think it would, and I
So,
think
I
it
mean,
would
there's
take a
a
lot of time.
Ton of steps, but it's been very, very beneficial for that community. Whether it works for us, I don't know, but this, all these other cost increases pushing on what we can offer. If that's a way that would, allow us to reduce those or hedge a little bit.
And can you and your guys, I don't know, this may be an unfair question, but if we have an agent system here, what would it take for us to estimate, and I mean estimate, what it would cost to bring that up, to maintain that, bring it up to the level that we want to offer customers? And you don't have to answer that question tonight, but if you might.
It's a complete.
Yeah.
Oh, yeah, you guys are probably not even.
Complete.
It's a whole
You have to be
nother
certified.
animal. You gotta be certified.
Yeah, we can't
to do
even-
certain things with it, and, I mean, it would probably require more.
They're a available person, and I think there are two. For a profit margin to the community to defray costs from others.
What population do they have?
No.
A lot bigger than ours.
Yeah, they are.
Almost 6,500 or 7,000.
So it's Traer. Corning's not much bigger. than
Traer's
us.
pretty close to what Stuart is. They used to live in Traer.
And they have gas.
Well, they do now. They didn't.
Corning does as well, which we convert.
I was to start.
Oh, really?
I was gonna say, I mean, well, I think it's a good idea to look into the costs. I mean, I know from the federal side, they're really starting to push down, what they can do to get people to stop using natural gas due to how it affects, greenhouse gases and all that. We have to take that in consideration too, that, are we buying into something that in 10 years, we're gonna start getting more taxed heavily on, that it's not gonna make sense to us in the end. I mean, that's a concern we'd have to have too.
Yep.
So.
So, but I certainly don't have a problem with.
Yeah, maybe there won't be something that fits for us, and so
Yeah.
at least we can
Figure
figure out.
Brian to go ahead.
Yeah, Brian.
Chip's was willing to spread the math on it to make, to give us some assumptions and no charge.
Well, here we are. Here we are again, Chip, we got our tin cup.
I can go get the water. Please.
Had to get that.
So, any objection to have Brian do a little research on this?
I'll probably bug Mike to help.
Okay, anything else? We'll move on to a public forum. Is there anything else for public forum?
Well, the only thing I wanted to add is we're getting really close to going out for bids on the water tower. We were hoping the USDA would have the paperwork ready for tonight, but they didn't. So I just want to let the board know that we very well could be in the next week or two calling for a special meeting.
Okay.
Just to speed this process up a little bit. Whenever the paperwork's done. I know you want to say something, Chip.
So there's a call planned for tomorrow. So I'm trying to light a fire to folks at USDA to get the process going. And I'm adding logs to that fire as much as I can. So you guys have been waiting a long time on this.
So at the conference, we're gonna have it 9:15.
Correct. So
The original bid date was this time of year, back in 2020. I just looked at, I found it in an old Word document today.
Chip,
So
in
we-
hopes that I don't want to sound like a bull in a china closet, but is there anything we can do to help that?
on this topic, pardon me?
Is there anything we can do to help that?
I perhaps we'll have a call into the person at USDA and say, and I think it would be great if it would come from you, John.
Okay,
We're trying everything we can, there's a lot of people waiting on, everybody's teed up, your bond councils who are studying, everyone is really teed up and ready to go, but there's a very deliberate, specific process that we have to follow for USDA.
okay.
So,
Well, like I say, I don't want to act like a bull in a china closet, but I don't mind calling if you think it would be helpful.
that'd be great. I felt that way for about 18 months on this, and I I think we want to take advantage of interest rates.
Yeah, absolutely, that's right. So, leave. Okay. Anything else on public forum?
Can I add one quick?
Sure.
And I'll make it brief. It feels like I'm backtracking the same for a long time, and I think it needs to just be. As we talk about rate increases, we talk about the percentage that Xenia raises us versus the percentage that we raise to the customer. It's not a very fair comparison because we mark that water up. We're probably not telling you anything that you don't know, but by saying they give us a 9% increase and we give them, then we pass on a 3% increase, we've absorbed 6%. That's not accurate because when you look at, we purchase water for $4, that may be a 9% increase. We sell it for $4, we increase it by that same 40 cents to cover that cost, that is a 3% increase. Yes, the percentage looks, it distorts that percentage. And so it's important to remember that if they give us a 9% increase, we don't have to do a 9% increase to match that. We do a 3% increase. So that's really what you have to wrap your head around when you think this is a 9% increase. Well, we'll be giving our customers a 3% increase to match that. So you don't have to imagine giving our ratepayers a 9% increase. And I just think that's important. As we've been talking about percentage versus percentage, that is distorted because of our markup, and that we just got to keep that in mind.
You know,
we
I
still,
think
we
the
still
other part of
pass
that-
it though, right? Because we're still, it's a smaller percentage and a larger number.
Same amount of money, but when we only represent it, we don't often represent it as a 39% increase. We represent it as a 9% increase. And it's just important to, I just wanted to clarify that. I'm sure everyone already knows that, but when you say 9%, it's important for our customers to understand that that would not be a 9% increase to them. A 3% increase to them on the average person would be a couple dollars a month. I think everyone's gas bill has gone up more than $2 in the last month. So just putting in perspective, like as utility rates go up, if your gas bill goes up, $20, people would notice. That's, you never want an increase. But I'm just trying to put some of this into perspective, how much this increase actually is for the average customer. It's a couple dollars a month, which.
The other thing that I've noticed, Ben, and as you can join in if you want to, but I guess where I started thinking about, asking for like a 3% increase is I remember too, the days our water fund was in the hole $300,000.
Yeah.
And you look at our water fund now and, it's pretty good, We've done the right things. We increased water after our water rate study. And that's got our water fund back where it belongs. And if we were losing money, which if anything, the best thing is we might be breaking even here. But we're not, it's not taking our water fund in the tank, is what I'm saying.
And we're trying to give it to this.
Yeah,
We have.
See, we're taking, and I totally agree with what you're saying, and it's, in this table, I don't know if you have this or not, but this tells you, how much the utilities is saving the customer. It's the stress being put on a bunch of volunteers versus, big bad, corporate kick them in the head and we're gonna raise prices because we can, because what else are you gonna do?
That's right.
That's unacceptable,
It's unacceptable.
it's ridiculous.
And like Chip says in his letter, in the long run, it is unsustainable.
Exactly.
To continue to do
And
that.
it's not the 9% now, it's the 9 this year, last year, and 12 next.
Yeah, no, I don't.
I
And
certainly wasn't trying to say that, like, I'm okay with rate
I
increases.
totally
I
understand
just
what you're
wanted,
saying.
when we throw out these high percentages, sometimes, it's easy to misconstrue that
Very good
for the
point.
public.
We're just on the end of this. We got a 60% LMI population base trying to meet their energy demands just to get gas, just drives you nuts.
anything else? for open forum. Bob?
Just two quick things. First, a compliment to the people that volunteer through all these complicated issues. It's not easy. I don't see a big cheering squad out on the street or on Facebook cheering you on. So I'm just going to acknowledge your work because there's nothing easy happening in this world right now. And I appreciate it. I also appreciate the open minds to look at different options because what I'm hearing is definitely a future where you don't own it. Des Moines Waterworks owns it, and that's a scary proposition.
Yeah, it is, Bob, that's right.
It really is. The last thing, and this is, from my ignorance, I'm gonna ask this question. It looks like a back in place, but water is not a big income generator and maybe a lot of challenge ahead. What is our loss from what comes in versus what we bill compared to the target that communities should? Are we worse? Are we average?
So you want us to
probably know
measure
that.
that?
Yeah, for water loss.
Yeah, water loss, what we purchase versus what we bill out.
So you're,
Oh, I'm sorry.
no, okay.
What our water loss, it depends on the time of the year and how much we pump, what that percentage is. In the summertime, when we're pumping a lot of water, our water loss, we've had some moments, 10%. When this time of year, when we're pumping less water, it ranges from 17 to 20%. What utilities shoot for is you would have less than 10. That's what we're hoping to address with this water rehab, with our water mains. We're replacing a large amount, aged water mains, which presumably have leaks. And so we'd like to get that number down.
That's admirable. I hope it can be tied with other infrastructure. So, because one entity tearing something up and another entity going back, I can drive the streets of Stuart and kind of recognize that pattern. And that's not a criticism of anybody. It would make sense to look at that. And if that loss rate gets down to average or better, that'd be awesome.
Well, I think, Bob, one of the things that I've talked about before, Ash knows this, that if we're digging our trenches or putting our water line in, whatever the case may be, and the city finds something that they could do in the same hole, you know, we'd be happy to work with them to make that happen.
I hope there's coordination. Am I right, Ben? Some of those lines date back to World War I. R.J. McKee was the mayor.
Most of the lines we're gonna replace in this project are between 80 and 100 years old.
Yeah. Yeah, R.J. McKee put the first lines in. He led the effort, I guess. We've been working on other people's money.
Would you agree with me, Ben, that most of those lines aren't any bigger around than that pencil right now?
No, yeah, when you look through most of our 4-inch water mains, you can't look directly through them. When we run out a cross section, because of the buildup inside, it forms, you know, an uneven buildup inside, so it's difficult to look directly through them.
Well, thanks.
So are these lines in streets or are they on the setbacks?
Most of them are on setbacks. Some of them are in streets. With a new project, they'll all be in the parking. So we won't have any.
But I mean, are they linear or are they perpendicular to the, parallel with the street or perpendicular? Is that?
Parallel with the street.
So, I mean, that's what, as John was saying, I mean, that's the street thing, right? You know, I mean, if that's a piggyback.
You would, it
Go
would
for it.
make sense
Yeah, if
to do
there's
that.
something in that hole that Jeff or Jim can do.
No, I agree.
We'd
Why
have
would
to
you want
have
to pick
it.
it up twice, you know, it doesn't make sense, but.
Anything else? We stand adjourned.